And now I have the great pleasure to hand over the floor to the hosts of this event, namely the CEO and the Deputy CEO of the Luxembourg Stock Exchange, Robert Schaff and Julie Becker. Next month, Julie Becker will take over from Robert Schaff at the helm of the exchange. Over the past few months, this leadership duo was working side by side to prepare for this transition. And today they will discuss where capital markets are heading and what it means for Luxembourg and the Luxembourg Stock Exchange.
Thank you, Nathalie. As we have heard from the previous speakers, Brexit, sustainability and technology, and especially if linked together, will shape capital markets of the future and also impact the business of the Luxembourg Stock Exchange. But where exactly will that lead us to? Let's have a look at the three drivers of change one by one. First, Brexit. Mr. Gramegna and Ambassador Marshall have hinted at have given certain guidance and hinted at where this could be heading. Let me put it in a different form. I would say the medium-term consequences of Brexit bear the potential to boost capital markets. This is the positive scenario where the UK and the European Union will continue to work hand in hand for Europe to remain the home of international debt markets, as it has been the case for the last 60 years. In the worst-case scenario, the UK and the European Union are drifting apart, adding a new level of complexity, which could deter especially issuers coming from all over the world and who raise capital in international markets to look for easier locations to do their business in the future. And these locations could easily be Asia or even in the US. This is why we continue to believe that no one on either side of the channel has anything to gain by jeopardizing a close and fruitful cooperation that has lasted for decades and brought clear benefits to all parties. But if a win-win scenario is more difficult to imagine in a separation, we should do all we can to avoid a disastrous lose-lose situation. Because let's not forget, there is enormous amounts of business and money at stake, including financing of governments and companies. And as we are still struggling with the socio-economic consequences of the pandemic, access to financing is and will continue to be essential for companies and public entities. And to give you as an illustration, I would like to share just one number of showing how important the need for financing is. In the first 2 months of 2021, January and February, the total amount of $827 billion of new debt was raised in markets, a record amount. This shows the importance of well-functioning capital markets to support the recovery efforts of governments. And at the Luxembourg Stock Exchange, we remain optimistic, Julie, that our two financial centers, Luxembourg and London, will find ways to continue to cooperate like they did in the past. But beside unprecedented funding needs that this pandemic highlighted clearly, it also brought forward a challenge that few saw coming. COVID-19 accelerated dramatically the focus on sustainability and also brought ESG center stage, our second driver of change. And you, Julie, you are our sustainability expert, founder of LGX, and you also advised the European Union on its action plan for sustainable finance in 2017. How does sustainability impact capital markets, and what can we expect next?
Well, Robert, let me start by saying that sustainability is increasingly becoming a natural part of finance, or as our colleague Chiara Caprioli, remember, said last week in a panel discussion, a no-brainer. The pandemic demonstrated, as you just said, that situations we never thought about were possible can actually happen, and even very fast. There's a new shift surrounding the transition to a low-carbon and more inclusive economy. And finance needs to support these efforts. And that's why we see new products emerging. Take, for instance, sustainability-linked bonds, or SLBs. When issuing an SLB, an issuer commits to future improvements in sustainability outcomes by a set date. So SLBs represent a new source of financing for issuers in all industries that disclose their sustainability strategy and set clear, measurable, and science-based targets to become more sustainable. And this, Robert, is a very important development because it broadens the scope of sustainable finance products, but also the scope of sustainable investment opportunities. And why is it so important? Because today there's still a lack of supply of sustainable securities. And SLB and other types of instruments can help broaden the scope of sustainable investment universe and satisfy, as such, investor demand. And in the same spirit, we recently added on LGX a new section dedicated to climate-aligned issues. These are companies that derive at least 75% of their revenues from environmentally friendly activities, such as renewable energy or low-carbon transportation. So all their bonds, whether labeled or not, can be considered as new sustainable investment opportunities. But Robert, you asked me what we can expect next. One thing is certain. Issuers' sustainability strategies and ESG profiling are becoming increasingly important. And why? Because as new risk scenarios linked to climate change emerge, investors are scrutinizing a company's willingness to embrace ESG factors. And this shift pushes companies to be more aware of the role they play in society, to better define their own purpose, and to consider their impact on a broader group of stakeholders. Actually, sustainable finance creates a link between science, the industry, and finance. Indeed, data now makes it possible to better understand a company's impact on our lives, whether we consider its carbon emissions, its impact on biodiversity, or the resources it uses for its operations. Science, indeed, is the foundation of all these calculations. And as the scope of sustainable finance broadens, science, and it must be really clearly said, science will play an essential role in the definitions of new products and standards. So green finance and science go together. And green finance must be science-based in order to maintain the integrity of the market, or as Minister Gramegna said, to prevent and fight greenwashing, but also to build investor trust. So sustainable finance is already, but will definitely become science-based finance to define metrics, to measure impacts, to measure climate risk, as Ambassador Marshall was mentioning. We need science, we need data, and we need new skill sets. Can anyone imagine what that means in terms of new business opportunities?
Well, you know, business opportunities, we are convinced about this potential that sustainability brings to the market, and at the exchange we are taking accordingly steps in order to be prepared and seize these opportunities. But Julie, you talk a lot about E and S of ESG, and your last point seems to put more emphasis on G for governance. Is that so?
Absolutely. it is essential for boards and managers who are driving business decisions to understand the magnitude of the shift that's happening. Boards in the financial sector must demonstrate their skills in AML know your customer or MiFID regulations, but as importantly, should they do so in sustainability. ESG knowledge should become mandatory for all stakeholders, including public authorities, including businesses, and even the wider public. As Minister Gramegna said as well, we are in a transition period, and transition involves action. So ambitious sustainability goals should be defined in the boardroom. And companies that are passively watching from the sideline will suffer the consequences, because climate risk is investment risk. And it's something that asset managers and asset owners are going to hold the companies they are investing in truly and really accountable for. The market is moving fast, even if still not quickly enough, in a more sustainable direction, pushed by very strong public convictions, driven by the US finally re-entering the Paris Climate Agreement, or the new regulation, and in Europe, a very clear agenda to become net zero. But the EU will not become net zero by itself. We need companies and institutions to accelerate their transitions and deliver, because investors and customers will turn away from companies that fail to do so. And again, that means that access to capital markets will soon be preconditioned by the existence of a complete and credible ESG profile of issuers. And it will be all about measurable impacts. And talking to measurable impacts, Robert, this leads us to our third driver, namely technology. Tech offers new opportunities for capital markets. Isn't that so, Robert?
Well, the answer is a very clear and resounding yes, it does. Pandemic accelerated digitalization, as we know, across multiple industries, including the financial sector. But technology doesn't change the foundations of capital markets, but it makes markets more efficient and resilient. Technology allows us to review our models, increase our services, review the way we interact with market participants. And I still remember very well the times when traders were calling out their orders physically on our trading floor. Look how far we have come since we introduced electronic trading. And imagine where we will be in 3 or 5, not 25 years from now. So change will be dramatic going forward. The Luxembourg Stock Exchange is small, fortunately, I would say, and agile, and we like to be an agent of change. We are at our best when we can help shape the market, when we can prepare the industry for future development, where we can improve the way it operates, make or ensure that it better responds to changing investor behavior, and also new requirements from issuers. And all of this while respecting the mandate that we were given by regulators and by policymakers. So if you're looking at technology and its developments, it will offer a world of new opportunities which we must seize. And we believe the best way to do so is by teaming up with tech firms. You have seen, in fact, the firms and their presentation early on, which we invested in. These young companies, and many others, by the way, are like technological wake-up calls for our industry. And they showcase very convincingly that technology and digitalization are no threat, but rather our life insurance to remain in the business in the long run. And one more thing. We talked about data early on. Digitalization allows us to manage data, which means collect, process, disseminate data in a much more easier, faster, cheaper way, thanks to blockchain and artificial intelligence. And technology also provides for better information, and it ensures level playing fields for investors. Exchanges ultimately provide transparency through data and documentation, and we serve as meeting places to issuers and investors and all the other stakeholders of international capital markets. We are a service provider to this industry, and we operate at the heart of capital markets. And this provides us with the opportunity, and I would even say gives us the power to make technology and sustainability essential parts of finance of the future. And as Natalie said early on, as my term at the exchange ends in 1 month's time, it will be up to my successor, Julie Becker, to take up this challenge and implement this ambition with her teams over the years to come. Julie, I wish you all the best.
Thank you, Robert. I cannot agree more. At the same time, I would like to underline as well that the challenge is, however, substantial, because it requires a wide array of technical and scientific experts, not present previously in the financial world. And as an illustration, you remember the European Commission requested the assistance of both technical experts, high-level experts and technical experts when defining the EU taxonomy, and even involved around 150 additional, mostly scientific experts to help translate scientific indicators into practical guidance for industry and finance. So I keep on repeating that finance needs to support the real economy and should be at the center of the solution to our global challenges. This is why we need to create digital capital markets with impact and purpose.